Hi folks, Scott here, and this is the wrap for Wednesday, September 4th. So a nice bullish day today that managed, this is a scrunched up chart here, and I've got NASDAQ down here. I've done some testing on NASDAQ. In fact, you'll see an interesting data point when I review my pre-market comments that I shared this morning with our members, which I'll also share with you, regarding the NASDAQ and the ES, what happens with a gap in opposing directions. That's why it's up here. That's why this testing workspace looks a little bit different than it normally does. But what I want to show you going into tomorrow is the following. Let's look at the cash indices. And you can see the S&P 500 closed up above its 10-day moving average. That's the yellow line. We're still above the 200-day moving average, but we did not close at a 10-day moving average. So similar to last night, I thought I'd show you the results of closing above the 10 and 200-day moving averages, but not at a 10-day high close, and only in the month of September, since September tends to be a somewhat unusual month. And there you go. So month of September under similar scenarios historically about 50-50 in terms of which way we're likely to gap on the subsequent day. However, using an end of the day stop clearly shows a long bias, meaning over 80% of these down gaps have filled by the end of the session, and only roughly 60%, 61% of the up gaps have filled. That's a 20% difference on a decent sample size. And they're both, the delta's in the same direction, meaning this favors longs, this shows greater risk for shorts. So both supportive of the a bias to the long side. So that gives it even more weight in my opinion. So I will rerun these numbers for our members in the morning using our MTG stop parameters, which is just a volatility adjusted stop equal to 30% of the 5-day ATR. But on the surface, it appears we're going to have a long bias, at least based upon this one particular study, for tomorrow, meaning shorts may be a little bit riskier and longs may be a little bit more attractive. As always, I'll defer to our gap guides. We have several things in play. We had a 10-day moving average up straddle today. We closed above the 10-day moving average after closing below it. We also had another, according to a member, another WS7, the widest range day of the past 7 days. So, and tomorrow is the 5th. 5th is a real unusual month, so you can watch the video tomorrow. Members will see the stats on that in our worksheet in the morning as well. So lots to consider going into tomorrow, September 5th. Let me show you what the worksheet showed last night for today and my pre-market comments. So the worksheet is really designed to give you at a glance a view of our 8 individual gap guides for the 8 indices that we track. And you can see, one of the neat things it does is it consolidates those 10 sometimes confusing opening zones, especially if you're new to our methodology. It takes the UHC and combines it with the UH and combines it with the DH, and the UL and combines it with the DL to create these above the high opening areas and below the low opening areas. And then it takes the other 8 zones and groups them into 1 and 2 scenarios, either between the high and the close or between the close and the low. So it gives you bigger sample sizes, especially when applied to all 8 markets and the 3 systems that create each gap guide. You can use it to back into the overnight odds for gapping in a certain direction. Today they favored a gap up, and I did go long last night and made plus 2 3/4 points on half, and was stopped for minus 2 3/4 points for half a scratch trade. But I digress. So here's the key thing. You knew, or at least our members knew, and I knew, that a gap down between yesterday's close and low was going to be an attractive overall setup for fading. And you can almost guarantee I'm always going to trade if these numbers are at least 60 and 1.3 here in this column. And sure enough, 61.3 here, but nowhere else. So clearly, a gap down between the close and low was the best setup. No unique day factors to worry about. And when looking at the unique patterns, down gaps after a false down day, that's a unique pattern described down here, were positive, also meeting my criteria, as well as down gaps after a WS7 day when below the 10-day moving average and above a 200. Really strong numbers shown there. So looked like all systems go. So I'm just going to cut to the chase, show you my pre-market comments. Some of the other research I posted for our members. Last night's video showed a little bit of risk. I don't even know if I'd go that far. That's a neutral setup considering the sample size. Not big enough to call weak, I don't think. See down gaps after a large up gap filled and closed higher. That's actually been a neutral setup, but the gap was small and mid-size, which is what we had today. Really strong numbers. Check that out. 87% win rate on 1.7 profit factor. And then lastly, what I mentioned at the beginning of this video was fading down gaps in the ES when the NASDAQ is above, or essentially opening above its prior close, meaning trading up at 9:30 a.m. Eastern Time. Under similar market conditions, below the 10 above a 200-day moving average has been really strong. Only one loser in 11 years. 23 of 24 wins. 4.6 profit factor. Now, word of caution. I showed this to, it doesn't happen that much, but I showed it to our members, and some people were thinking, well, maybe we ought to trade this. No. This is what I call raw data. This is, it does consider our MTG stop parameters, but it does not consider commissions or slippage or missed fills. And when you include those three things, we looked at this, I think it was this exact number, and it took this number negative. It went to becoming a slight money loser. So you got to keep that in mind. These are just tiny wins, All right, so overall, slightly positive setups per the guides, mostly positive factors for down gaps, and a little bit concerned with mixed potential opening directions due to the futures rallying in the ETFs above the ETFs last night. That was my really own concern. So I said, as long as we open below that 4 p.m. close, this is where the ETFs were filling, the spiders specifically, then I'd use a half size position and hold half for the extended target or beyond. I will not fade a gap up. And it was a great plan. Unfortunately, markets rallied a little bit after I posted this. So actually, it was right around that area most of the late morning. Opened at 38 and a quarter. A couple ticks too high for me, so no fill for me. And just missed it. Told people I would do a pullback to the gap fill area if we got one. We didn't. And that left me to look at the 15-minute guides, which are trades beyond the magenta, the pink lines. Nothing in the 15-minute guides today, but the first hour range guides clearly favored a high breakout. For these, I'm looking for a weighted average of 55 and 1.1, and clearly the ES had it today. Check. As did the YM. Check. And the NASDAQ. Check. And the Russell. Check. 4 for 4 in the futures. Looking at the ETFs. Spider. Check. Diamonds. Check. Q's a little bit weak on win rate, but we'll give that a half a check. And then Russell neutral. So basically, if you think of it this way, out of 8 possible points, it got 6.5 in my mind. So did not get a point here. It wasn't negative. It wasn't against it. And we only got a half a point. If you want to, that's a simple scoring way. That's the way I do it, frankly, and it works. So anything more 6 or more points out of 8's almost always going to be a good setup, and at least historically attractive. So I took the long. The ES showed 4-point target, 5.25 point stop. Went long 47.50. I told people I was concerned about the fact we'd rally straight up, so I did reduce my position size for that. As it turned out, it went +4. I also told people and posted in the announcement tab I would hold about half for +6, and it went up to 54 over here and got filled there for a nice win. Now I felt really good about all that, and I noticed that we were trading above the highs in the ES as well as the NASDAQ, and right at him in the Dow, a little bit below in the Russell. And I thought it was a worthy trade to go long in a break of a trend line late afternoon here. So I went long around 2:30, 2:45, around the 15.52 area with a stop at 16.49.75. Kid you not, was stopped right there, I believe. Thanks to this news coming out of Congress, I heard something about Syria. And of course it rebounded and finished high. So that was a little frustrating to get back a little bit of my profits, but that's why I'm not primarily a discretionary trader, but rather a probability trader. And that was my day, and that is the wrap for Wednesday, September 4th. Have a good night.